I'm going to give you a hint. Gold, this is one of my favorite topics. And I think everyone in this room should, I'm sure a number of you already have it, and you might be up to your ears in it in various forms. And so you're lucky, because the rest of the economy hasn't had the insights that you've had. In my mind, gold is a currency, and at certain times during the economic cycles, it will perform very well. Over the last 100 plus years, it's performed well in 3 big cycles. This was the note that I was talking about, and I've basically covered off what I want to talk about on paper money. It's a very devious form of taxation thrust on us by our governments under the guise that they're helping us out. Speaking of gold as a currency, I want to look at 2 periods. Gold from 2001, when it was $250 an ounce, which happened to be a 20-year low for the price, and 2004. And if you look at the column of numbers on the left-hand side, more close to the center of the screen, and the percentages, this is how much gold had appreciated against those various currencies. And you'll see that at the top of the list, the US dollar, gold was up 58%. But in most of the other currencies, it wasn't up very much. So you really had the audience of America looking at gold, and that's about 330 million people. But since then, it started moving in all currencies, and when you look on the right-hand side of the screen, you can see the percentage moves gold's made since 2001 to present. So it's now moving in all currencies, and the world has a population in excess of 6 billion people. So the potential audience here is 20 times larger than it was in 2004. And there are people looking at this and saying, I never heard a reason why I should be buying gold before from my portfolio manager, but why is it doing so well? And there are a number of reasons for that. This goes back, this chart is my favorite. I'm sure it's been around for a while, but it's going, on this chart on the left-hand side, we're going from 1896 through to present. The chart is created by taking the Dow Jones Industrial Average and dividing it by the price of gold, and you arrive at a number which is equal to the number of ounces it takes to buy the Dow. So on the left-hand side, it's saying 1 ounce was required to buy the Dow in 1896. So gold was $20 an ounce, the Dow was $20. And then you're seeing a favor, people favoring financial assets. And it culminated in 1929 when 18 ounces of gold bought the Dow. 3 years later, 1932, the Dow had fallen off a cliff. And back in August of 32, only 2 ounces of gold were required to buy the Dow. The Dow took 26 years to get back to where it was in 1929. And that would be about 1955, 1956. And then it continued going higher, and by 1966, it took 28 ounces. And then for the next 14 years, the Dow stood still, and gold went up. And in 1980, you only needed 1 ounce to buy the Dow. The Dow was 700, 800. Business Week said, equities are dead. Whenever they do that, go long the equities. And then it took off, and the high-tech bubble, it culminated right at the time the tech bubble was blowing up, and it was 44 ounces, and since then it's been falling down. And today, 9 ounces buys it. And I would suggest to you that we're going to test the bottom range of 1 to 2 ounces buying the Dow. And that could happen with gold going much higher on its own, Dow going down and gold going higher, or some combination of that. But we're likely to see this happening. And the question is, how do you protect yourself? And what do you buy? And that was a question that always made me spend a lot of time thinking about it. So I looked at the 3 periods, 1929 to 39, which was a deflationary period, 1966 to 80, which was an inflationary period, and 1999 gold was at 250, and then 2001 it was at 250. So using those two periods, or that last period, the Dow is in blue, gold is in orange, and Homestake in the first two periods is shown in green. Homestake was the largest gold company in North America. It was the largest company listed on the New York Stock Exchange for quite a while. So it's really a proxy. I'm using it as a proxy for senior gold stocks. And then on the last section, from 99 to present, I've used the XAU, or the Philadelphia Gold Index, as a proxy for Homestake, because Homestake was bought out by Barrick. But you can look in the first side, Dow's down 60%, gold's up almost 70%, Homestake's up just under 500%. The next period, and that's when gold was at a fixed price by central banks. It was freed in 1971 from a fixed price, and during that period, the Dow stood still, up 8% over 14 years, and gold up 2,300%, and Homestake up 500. And on the basis of that, projecting into the future, I think gold has quite a way to run, and the seniors, if you want to buy them, probably have a triple from here before the end of the cycle. That also means that the juniors are going to go a lot more than that with the gold price running. And that's why I've chosen, after running Gold Corp for 18, 19 years, and then buying Wheaton River, because I saw a double or a triple in our share price if I bought it. Excuse me. I thought, coming out of there, I should invest in juniors. And I own 37% of Minera Andes and have interest in a number of other companies, which I believe have a lot of potential to grow in value. When I was running Gold Corp, we started with holding gold from the market because I believed it was going higher. There was a favorable tax reduction taking place in the province of Ontario, where our primary asset was. We're going to see tax rates come down by 6%. So I thought, if gold's going up and I could deliver it into a lower tax rate, why not hold on to it? And Gold Corp, by the end of '03, had more gold than 50 of the 114 central banks that own gold.